the S&P 500 daily cloud chart and price in the pre-market hours for the S&P 500 at 5:36 p.m. Central Time on the 23rd is 42.26. Zigzag did not give us the swing point up here at the D wave, down wave 4 at that high. And I believe I have finally figured out why and what drives the ATR4 for zigzag. So the swing point up here, or the point, has to have a higher high than the previous 5 bars. So it does. And it has to have a higher high than the subsequent 5 bars, and only 4 bars have printed, and that's where ATR4 comes in. So if there is a lower ATR4 for the previous 4 bars, then it will print without waiting for the 5th bar. So on the 17th is the point here, and you can see that today's ATR4 up here is less than the true range of the bar for today. But then this bar in the previous day on the 20th is higher than the true range for that bar of that day on the 20th. And then the other two above it, 62.70, it's below its true range. ATR4 is 61.37, below its true range for that day. So this is the day and ATR4 that blew it for getting the swing point. So if it was less than this true range, we would have gotten it. So now we have to wait for the 5th bar, and unless price can tick higher than this high, 4393.57 for tomorrow on the 24th, we'll get that swing point down here. We'll have the down swing point, and the D wave, up wave 4 did shift over, so now that's at the current bar for the 23rd. Let's see what happens tomorrow on the 24th. So today's bar on the 23rd is the bar after the identical 3 crows down here. And this pattern here fell right into our lap for the bar on the 23rd. So you know about the identical 3 crows from the previous bar, and we were waiting for today's bar on the 23rd to give us the signal of which way the market is going to go, and it doesn't get any more precise than this. So we could get the ladder bottom candlestick pattern here. Here's the identical 3 black crows, and then the bar on today closed lower and opened lower than the previous bar, the last bar of the identical 3 crows, with a tall wick here. And there it is right here. It opened lower than the last bar of the identical 3 crow here. The 3rd bar closed lower than the close of the previous bar and has a nice wick up. So if there's a gap up tomorrow on the 24th and creates a white candle like this, so a gap up from where it closed and open, you can read it here. The last day should be a white candle that gaps open above the body of the prior day. So we're talking about gapping open above the open of the previous bar, or just the body of the previous candle. And if it does that and starts moving up, that's a buy signal as good as you can get. So if you feel like taking advantage of that, if you can catch it in the pre-market hours, something like Microsoft, I think they report tomorrow. The big fat cap balance sheet extraordinaire mega techs start reporting starting tomorrow, and I believe it's Microsoft. So if you want to buy those in the pre-market hours, as it starts sailing up, I don't see any harm in that. Me, if I did that, which I'm not going to do, I would jettison it if it stalled at all at the conversion line 4291.90. So maybe a quick trade to make some quick money, but if it blasts above that and the baseline, it's worth holding on to see what happens. It would be incredible to tick higher than this high, 4393.57, and that would pretty much negate the swing point to the downside here, so that would be absolutely incredible. And right around the conversion line you can see is the disqualified buy risk level at 4290.16, which usually is pretty good resistance and support if it's not qualified or confirmed. And you can see the fast trigger made it below 25, and the slow trigger is slowly trailing it. So let's see what happens tomorrow. That would be another unbelievable stroke of luck if this could just skim off 25 and start heading back up for the slow ATM trigger down. And a long-term oversold P alert down did not print, but we did get the long-term oversold down for pressure, which is pressure up down here. So it's giving an indication that it could possibly want to go down, which is up here. Hard to wrap your head around, I know. So really have to wait till the P alert down shows up somewhere over here. And in the way to the upside is this 200 EMA moving average and dash screen 4271.15, so that's before the conversion line and the sell risk level. But if it's an impulsive move to the upside, it should just blow right through this 200 EMA. And the 325 EMA is still right below where the close was, so 325 EMA equates to the 65-week EMA. I have it translated into days, 325. So for now, it's still between the 325 and the 200 simple moving average at 42.35. So it also has to blast above the 200 simple moving average, which is no easy feat. But if it does have a chance of getting to the conversion line, blasting through that, and maybe even blasting through the baseline, depending how good the earnings are for the big fat cap megatechs. Okay, on to lines. So this ongoing supply line to start the day is at 4371.66, so could get up to that too, you never know. Stranger things have happened. And then this ongoing demand line at 4157.11 to start the day tomorrow is a real wild card. All four qualifiers could come into play, or for sure three. So there would need to be an open below it, again at 4157.11, and then close below it, and it would become qualified. It could gap down lower than this 4189.22. So if there's a gap down and then closes below it for end of day without going back up, So if it just gaps down and keeps going, that will become qualified too. And then if it really takes off to the upside and gets past 4294.64, so above the conversion line, so it gets above that, and then subsequently turns around and heads back down and gets below that ongoing demand line, it will become qualified that way too. Here's the S&P 500 2-minute chart, and you can see the low here at 9:42 Eastern Time was 4189.22. So I call that absolutely nailing the lower Bollinger Band where it was to start the morning on the 23rd, and then bounced up really nice after that. And it looks like the D wave, down wave 5 printed as it ticked lower than this D wave, down wave 3, ticked lower than that low. So that printed. D wave is on the D wave, down wave A, and the D wave, up wave 5. So again, watch for this ladder bottom candlestick to possibly appear tomorrow morning in the pre-market hours. The S&P 500 weekly chart has a big fish on the fire here. Possible qualified and confirmed momentum down for 50% and 100% for end of day Friday. And there was a down close, followed by an up close, followed by the down close below the level in question. And then this week it opened lower than where last week's bar closed, ticked lower than all 4 bars in the sequence. Now all it has to do for end of day Friday this week is close below this close from the close of last week, and this becomes qualified and confirmed, and that would be really big. It's usually always big in the weekly chart when any of these things happen to get qualified and confirmed, because it takes so long, 4 weeks, 5 weeks sometimes, and that will be huge. And there's the qualified 50% exhaustion down at 3943.55, and the weekly sell TDST is at 4103.98. So let's keep an eye on that. We don't want to close lower than this close, 4224.16, for end of week Friday this week.